Good morning. Welcome back to the Broadcast Retirement Network. This is BRN AM for Wednesday, July 10th, 2024. And our top story today, shaping the future of the retirement system. Joining me now to discuss this and a lot more, Ralph Ferraro is the Senior Vice President and Head of Retirement Plan Services for Lincoln Financial Group. Ralph, it is always great to see you. Thanks so much for joining us on the program this morning.
Thank you, Jeff. Thank you for having me. Great to be here.
Yeah, and we're going to talk about a lot of different issues, and I love talking with you and your peers about success of the retirement industry. And I want to start with some recent legislation, the Secure Act. I know you're familiar with the Secure Act and Secure 2.0. How have those pieces of legislation in particular helped shape the retirement industry and the retirement planning landscape today?
That's a great place to start, Jeff. And I think the history of the retirement system is one of continuous improvement, right? With policymakers working together with retirement providers. Legislation plays an important role in continuing to make a secure retirement a reality for Americans. It has enabled employers to confidently implement changes to their retirement plans that don't require employees to take any action, but set them up for consistent savings that can grow over time. So the things like tax incentives for retirement contributions, auto enrollment, auto escalation, target date funds as QDIAs have been a key to making a retirement a reality for many people. And these were all enabled by legislation and regulatory action and then implemented by employers and plan sponsors. These have been important changes, but there is more to do. Successful policy improvements like the Secure Acts have driven great innovation in the workplace retirement system. And I just wanted to talk a little bit such as turning savings into income, right? One of the key provisions in the 2019 Secure Act provided the guidelines for employers to use when looking to add a lifetime income guarantee investment option within their plan, and provides the fiduciary safe harbor for the selection of an insurance provider. And also it added in, the need to calculate lifetime income that gets added once a year in a participant statement, and also added the portability provisions, which were very, very important as well. So the safe harbor essentially means that plan fiduciaries can now rely on a written representation from an insurance company that the insurer satisfies the stated requirements. As long as they get the written representation, they are protected from being held liable if the insurance company becomes insolvent in the future, or otherwise that does not have the financial capabilities to provide the income payments to the participants. So this is huge on giving fiduciaries peace of mind. It was a big concern of theirs. They're not putting the plan or the plan sponsor at risk when they choose to enhance their retirement plan by adding the solution. And they can focus on the benefits of these products that help participants protect their savings and secure income for the rest of their lives. The other, if we think about, I was just going to also wanted to talk a little bit about Secure 2.0 for a second.
Yep.
Right. So I think another great opportunity where legislators and the industry talked about and understood the burden of student loan debt on people's ability to save. And that provision, building off of the private letter ruling that was in existence from Abbott Labs, and making that now into law, I think is another great way that the industry working together with our friends in Washington to be able to help provide enhanced retirement savings.
My apologies for stepping in there, Ralph. As you know, sometimes it's so hard to determine when someone's stop speaking. But I did have a follow-up, and I want to point out something that you said and just follow up on that. The retirement industry today is built on 4 decades of iterative changes, and we've come a long way. You hit on 2 recent pieces of legislation with Secure and Secure 2.0, but the Pension Protection Act, was monumental in getting people. You hit on auto escalation, auto enrollment. It was
implementation of the QDIA.
Right. I mean, it has really, the retirement industry has really evolved to cover so many people, more than it did 4 decades ago.
I agree completely. And I think that's why I've always said that the Secure Act in 2019 was the most important part of legislation since Pension Protection Act, or PPA, back in 2006. And I think that Secure 2.0, obviously, emergency savings accounts, the student loan provision that we talked about, and there's more to come. I think over time, right? The dialogue will continue as we work with the legislators and regulators on what we need to bring next.
Yeah, absolutely. Your firm, Lincoln Financial Group, has been very innovative in addressing the coverage gap, and we've talked a little bit about that. And by that I mean coverage gap in retirement plans. Let's talk about some of the innovative strategies that you all, excuse me, I'm living in the South now, y'all are using to help with that coverage gap, because you work with so many different types of employers and work with them on their retirement programs, not-for-profit, for-profit, government. So how are you helping plan sponsors, not you, Ralph Ferraro, but Lincoln, the group, kind of help close that coverage gap?
Yeah, so I think about that being the other half key provision, right, of Secure Act 2019. And that coverage gap, I think, really exists primarily for small businesses. So we see the research that shows as an employer size decreases, they're less likely to offer a retirement plan. It trends down from 90% of employers with 500 or more employees offer a retirement plan to only 52% for employers with fewer than 50 employees. And that equates to 22 million companies across the US that don't offer a worksite plan, affecting 57 million working Americans. So we think it's really important. We brought a focused effort to bring solutions to small businesses. Small businesses, right, are the growth engine of the American economy. They employ nearly half of working adults in the US.
Yeah.
So we look at an array of solutions there under this broad category of group plans, right? So for any type of small employer that we do, whether they see the risk administration as a particular hurdle, or thinking about the costs associated with plan audits, et cetera, we look at just group plans, whether it be a multiple employer plan, association type programs, or an aggregation program, or the pooled employer plan, which came out of the Secure Act. They just make it less daunting for employers to start a plan. So we've rolled out pooled employer plan offerings on multiple platforms, but we also look at association programs as well. And in all of them, one of the common characteristics is looking to be able to offload some of those fiduciary responsibilities to other service providers that can take care of that fiduciary role for the plan sponsor, and the plan sponsor and the employer really effectively has one decision, and they are thinking about adopting or implementing a plan. One other area of focus is just holistic financial literacy education. And one of the things that we really saw coming out of the pandemic and from a lot of the research that was done throughout, right? You had individuals with all different facts and circumstances during the pandemic dealing with different challenges of not having, needing ways to address income gaps, or just looking broadly at their financial well-being and the impact on mental health. And all of that, we look to be able to help participants through this holistic financial education, really help them to manage their finances, set goals and saving for retirement, and look broadly across their financial, all of their finances, to be able to make sure that they've got all the right protections and savings programs in place.
Ralph, that's a perfect segue. And guess what? I need to take a very quick break. When we come back, we're going to talk about the evolution of financial planning and helping retirees. You're going to want to stay tuned right here on BRN AM. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device. Welcome back. We're joined this morning by Ralph Ferraro. He's the Senior Vice President and Head of Retirement Plan Services for Lincoln Financial Group. Ralph, thanks so much for staying with us this morning.
Thank you, Jeff.
Yeah, really interesting conversation, really thoughtful. And we could spend, you and I and so many others, we could spend hours talking about the historical changes in the retirement industry. I'd like to focus this segment on the evolution of financial planning, and you hit on some of this in the last segment, but let's talk about how, in particular, Lincoln has adapted its strategies in this area, because you hit on secure, but there's a lot of going on with technology. There's a lot going on with artificial intelligence. So how has Lincoln Financial Group evolved its strategies in working with retirees and just overall financial planning?
So we think about it. We take a step back, Jeff, and we look at demographics, right? They're certainly shifting. AARP refers to the aging population and record number of people that'll turn age 65 this year as the silver tsunami. We know that I think between now and 2030, there'll be 30 million more baby boomers that'll retire. 30 million is equivalent to the population of Texas. So it's a big number. And first and foremost, I mean, I think a retirement plan should include a plan for retirement. So we've shifted our thinking from focusing only on the accumulation phase or saving to also focusing on the income phase, because people need help not just accumulating savings, but determining how to spend those savings responsibly so they last a lifetime. As we started to look at the income phase of retirement planning, it became clear from the research that people want a guaranteed amount of income that they can rely on beyond Social Security. And in-plan guaranteed products offer an incredible way for employers to give their employees access to reasonably priced products in their plan that can do just that. Through the years, we've seen many innovations like this at Lincoln, and they have made saving for retirement exponentially easier for our participants. Back to some of the things we talked about from back in PPA, things like QDIAs and auto enrollment, auto escalation. Those were all things that participants weren't necessarily asking for, but these were to be, when they were implemented and working with public policy leaders and regulators, it was just decided, right, that implementing these auto features for contributing and investing was in the best interest of the employees and have made a big difference in the lives of retirement savers. So in the same manner, as a plan sponsor, fiduciary needs to operate in the best interest of the plan participants and its beneficiaries and not respond to just what they want or demand. A plan sponsor should take this into consideration when looking at guaranteed income solutions to provide improved outcomes. And what's interesting about these products is that almost unanimously, participants are saying they would invest in these products if they were offered within their retirement plan. But adoption's been still very low. So I think as an industry, we need to work to close the gap between participant demand and plan sponsors and consultants' product awareness and the willingness to add these to retirement plans. As we've seen with the other examples I've mentioned, the best way to make an impact is to automatically enroll participants in these guaranteed products as they get closer to retirement. And ultimately, we need to turn our retirement savings system into a retirement income system.
Ralph, you bring up some really important points, and I want to ask you, these are challenging times for so many Americans, maybe some challenging economic and financial times. The cost of goods, inflation, seem to be on a lot of people's minds. Does that change the philosophy? How do you accommodate, or how do you account for some of these challenging times that we're going through?
So Jeff, I go back to a little bit talking about, holistic financial wellness. And we have a tool that we work with participants, being able to have a conversation that helps an individual look at all four facets of their financial well-being, right? Their savings level, their debt level, their spending level, and the protection, right? Many of us, we need protection in different ways, whether it's automobile insurance, life insurance, et cetera. And so we try to have those holistic conversations and really help them think about how to balance all of them. And even, right, in light of some of the things that you talked about, some of the economic factors, because at the end of the day, it is trying to help them make sure that they strike the right balance in regard to their own personal budget, ensuring that, obviously They can take care of their immediate needs within their home, but also have a view towards the future as well.
Ralph, I want to shift gears. ERISA celebrating its 50th anniversary. I'm sorry to say that I actually predate ERISA by
Same
several
here.
years.
Same here.
Yeah, a lot of us do. But I want to get your reflections, if I could, on ERISA, and then also how Lincoln views its roles. You hit on some of this in the first segment, working with regulators, legislators, but in that framework, we've got this national framework called ERISA. Um, Talk about some of the successes of ERISA, but also the role of working as an industry member with legislators and regulators for the next 50 years.
Yeah. So I think if we just look back, right, ERISA did a good job of setting those minimum standards for these voluntary retirement and health plans in private industry to protect the individuals in the plans. And it was important that as these things were enacted, that private pension plans were not being mismanaged and abused. There was some concern at that time, which prompted the legislation to come about. And it was the culmination of a long line of legislation concerned with the labor and tax aspects of employee benefit plans. So since then, it's been amended to meet the changing retirement and healthcare needs of employees and their families. And first and foremost, it's right. You look at Title I, it's to protect the interest of participants and their beneficiaries in these employee benefit plans. And let's look at, I think from that, we can take a look at some of the success in the DC industry as a result of it. And overall, I think we've done a good job to date, but there's always opportunity for improvement, as we've discussed today, right, with PPA and Secure 2.0. So as an industry and a country, we need to make retirement programs more widely accessible and enable more working Americans the opportunity to turn their savings into retirement income. But here's some data points on the success over the years, right? According to ICI, Investment Company Institute, today more than 110 million American workers have retired nearly $10 trillion in wealth. And then Federal Reserve data shows that among families with retirement savings, the mean value of those retirement accounts have nearly tripled over 30 years on an inflation-adjusted basis. So I think it's important to have good proof points that show the success. And then lastly, if we think about the parallels between the Safe Harbor provision in the Secure Act and ERISA's objectives of promoting retirement security while also adhering to fiduciary responsibility, I think there's a balance that's trying to be struck there, right? The Safe Harbor provision is looking to facilitate the selection of the annuity option and mitigate the need for extensive level of analysis from both a product provider and the advisor on a plan or a consultant. But it also gives fiduciaries peace of mind when making the decision on what that in-plan guaranteed product to offer and confidence in that decision. So overall, and as I mentioned, advisors and consultants, they play a role as well through their due diligence and informed decision-making for their plan sponsors. So it's a collaborative effort. And I think finally that the industry collaboration and adherence to ERISA's principles enhance retirement security for all plan participants. And we need to continue to lean into bringing services and solutions to the market to improve outcomes, continue that improvement we've talked about. Also need to measure results to demonstrate proof points of the success of the private sector model. The need for private and public partnership is very, very important. As we've talked about, we have a collective responsibility as an industry. And when I say that, I mean all stakeholders involved across the entire DC ecosystem. Because the reality is, listen, I'll give you my perspective, there is some political pressure from the left and the right at times, looking at these retirement programs, the favorable tax treatment that saving for retirement in a qualified plan makes these plans at times a target for revenue offsets. So it's incumbent for us to continue to work with regulators and legislators to bring these successful programs and continue to expand them.
Well, Ralph, 50 years is a long time, but there is a proven track record of success. And I hope that you and I will be talking about this 50 years from now for ERISA 100. Ralph, we're going to have to leave it there. Great to see you. Great to talk to you. And we look forward to having you back on the program again very soon.
All right. Thank you, Jeff. Great to be here. Really appreciate it.
That wraps up this episode of BRNAM. Have a topic of interest, someone you think we should talk to? Drop us a line. And don't forget, for all the latest curated news, and lifestyle, wellness, finance, tech, so much more, all in one place. That's key. One place. Check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? Then visit our website. Hey, we're back again tomorrow for another edition of BRN AM. We'll have a very special guest and another important topic. Until then, I'm Jeff Snyder. Stay safe. Keep on saving. Don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.